The Bank of England policy meeting is coming up on Thursday. It's November the 2nd, where it's widely expected that the interest rate will rise for the first time in a decade, which would push the base rate back up to 0.5%, where it's sat for 7 years to March 2009, before it was cut to 0.25% last year. That was in the wake of Brexit, of course. Mike Ingram of WH Ireland joins me now. For what to expect if that does happen, what will the markets do?
Well, the market would certainly be surprised if there weren't a rate cut, yes? Okay. If you look at what the market's expecting. Overnight interest swaps, basically 85 to 90% probability. Economists are a little bit more circumspect. A recent poll of economists said 75% thought there would be a rate hike this time around. I think the balance of them are generally leaning towards, well, if it doesn't happen in November, it will certainly happen by February, which of course is the next inflation report. So it's largely discounted in the market. If you look at the positioning in around sterling, I suppose is at the front line here. Yeah. A lot of the more aggressive shorts, I think, have been taken out. And if you look at the skew in option pricing, again, the so-called risk reversal is looking relatively flat. It's looking absolutely flat against the euro. It's only a little bit of downside against the dollar. So again, that suggests that if we get a quarter-point hike, if we get maybe a 7-2 vote, which is, because at the moment the market's thinking we're going to probably see dovish dissent from David Ramsden and probably John Cunliffe, based on recent statements that the MPC members have made. Okay. And if Mark Carney in the subsequent press conference, which might be the most important moving part in the releases on Thursday from the Bank of England, if he says, I'm kind of comfortable with what the market is discounting now, you might not see a huge impact on sterling. Though I think it's clear that one of the reasons why people have to a large extent liquidated those shorts is because they don't want to get ahead of that. They don't want to be on the wrong side of that trade. But I think, short term, I think, we're probably going to get a kick up in sterling. That's probably going to impact the miners. It's probably going to benefit the banks, on the FTSE. But as I said, the pressure is the main thing. What's the colour going to be on the interest rate environment going into 2018, 2019? What do they see for growth? Now, as it stands, of course, they'll bring the inflation report out. What are their forecasts going to be? Now, if you look at the growth forecasts for this year, they're already somewhat ahead of consensus. Back in August, they were talking about 1.7% growth. Market at the moment, private sector aggregate's about 1.5. That 1.7 has come down since the start of the year. They came into the year at 2% forecast. They probably won't want to touch that at the moment because, of course, just last week we had that 0.4% growth rate for the third quarter after a very weak first quarter. So we seem to be building a bit of momentum during 2017. They've got a growth forecast of 1.5% for next year. They probably want to up that somewhat. In terms of inflation, we know they've already overshot 2.8%. We booked 3% last time. They'll probably increase that to 3, maybe even 3.1. Maybe this month, October, is the peak of inflation. 2.5% for next year. Will they touch that? Well, we've already got higher interest rates programmed in through the market. That forecast conditioned on market rates. But weighing against that, we've got somewhat higher commodity prices. Trade-weighted sterling since August has been rather stable.
Time for the Bank of England decision, and just be discussing and analysing those market moves live as they happen. Thank you for watching. Goodbye.